This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This lecture is on chapter 21 of the free lecture notes, which is manufacturing accounts. And let me give you a brief introduction to what it is we're talking about, and then we'll work through a full example. You know that in the trading account, when we're calculating the gross profit, we take the sales less the cost of sales. That gives us the gross profit, and then we subtract all our expenses. But sales less cost of sales, that bit, if you remember it, we call the trading account. Now, what we're looking at is the cost of sales. Because if we're simply something like a shop, if we're buying goods and selling them, then you've seen already in earlier chapters, the cost of sales is the opening inventory plus the purchases less the closing inventory. No problem. However, if we're manufacturing our own goods, then we need to do a bit more work. Because, all right, we'll take the opening inventory of finished goods, the cost of making what we made during the year, less the closing inventory of the finished goods. But how are we going to get the cost of what we make during the year? Because there are all sorts of costs involved. And if you look at the first page of the notes, we want all the costs of producing our goods. And there are what we call direct costs. They're costs we can measure in each unit we produce. If I'm producing desks, then every desk has wood in it, the materials which we can measure. Every desk will have labour in it from the workers, 2 hours to make a desk or something. It's something we can measure. But in addition, we've got indirect costs, which are all the extra costs in the factory. They're also called overheads. But the cost of producing goods, well, we'll have to include the cost of renting the factory, the cost of lighting the factory, heating the factory, and so on. We call them indirect or overheads. But one way or another, we need all the costs in the factory to get the cost of what we produce. We are going to have to deal with inventory, and in fact there are 3 types of inventory. There's inventory of finished goods. So the cost of sales will be the opening inventory of finished goods plus the cost of everything we produce less the closing inventory of finished goods. But there'll also be inventory of raw materials. I said if I make desks, one of the costs involved is the wood, the material. And how will I know how much material we've used in production? It'll be what I bought as adjusted by any inventories of raw materials at the beginning and end. And finally, there's what we call work in progress. That I've got all these costs of producing, but if some of the production wasn't actually finished at the end of the year and was going to be finished next year, then it was part of my production costs, but I need to know the production costs for those goods that were actually finished. Any that were not yet finished or work in progress, again, we'll need to adjust by. So it might sound a bit messy. It'll be more obvious, I think, when we do an example. And on page 97, there is a pro forma, a layout of how we'll calculate the cost of production of finished goods. We're actually going to do it with numbers if you look at example 1. So in example 1, we're going to calculate the cost of making our finished goods. That's the manufacturing account. And when we know that, then we'll be able to produce a trading account. And it says the following balances have been extracted from the books of Jimmy. The inventories at the beginning of the year, 1st of July 2015, with raw materials, work in progress, finished goods. During the year, we've spent on wages, direct, that's actually making the goods, 343,200, indirect, extra costs in the factory, that's things like supervisors in the factory. Their wages are a cost of the factory, a cost of production, but they aren't actually involved day by day making my desks. There's electricity, there's general factory expenses, maintenance expenses, purchase of raw materials, sales, depreciation, plant and machinery. The additional information, we're told at the end of the year what the inventories were. We're also told in note 2, electricity and maintenance expenses. 80% of them is a cost for the factory and 20% is for the offices. Here we're only interested in the costs in the factory. And finally, which makes it a really good example, note 3, at the end of June, an electricity bill remains unpaid, so there'll be an accrual, and there are maintenance costs paid in advance. So let's have a go. And remember, for the manufacturing account, we want to work out the cost of producing our finished goods this period. So we're going to add up all the production costs, but some of them relate to work in progress. That at the beginning of the year there were some items which were only part finished, and this period we spent more and finished them. But also at the end of this period there were some items where we haven't finished them, so we've had the part of our costs was in starting the items at the end, but they weren't actually finished. And so we start off with our opening inventory of finished goods, of work in progress, sorry. The opening inventory of work in progress, look at those balances, was 18,960. And all our costs this period, well, some of it was to finish those off, and they became finished goods. So let's now add on what production costs we had during this period. We had direct costs. Direct costs are our wages, and you can see there direct wages, 343,200. But also the raw materials. But here we know from our balances the raw materials we actually bought, but I need to know what materials were actually used. And we had opening and closing inventory. So if I know what I bought, surely I need to take off the closing inventory because they weren't used this year. And I need to add on the opening inventory because whatever we had at the beginning, that was used this year. So the raw materials, bit of workings, the opening inventory, we already had 15,600 waiting to be used. We bought some more during the period. Look at the balances. The purchases were 298,000. So the two together is everything, all the material we had. However, we didn't use all the material this period. So to get the material we actually used, we subtract the closing inventory of raw materials. And in note 1 at the bottom, the closing inventory was 11,900. So the cost of the raw materials actually used this period 15,600 plus 298,000 minus 11,900. Hope I'm right. I get 301,700. Now, those are both direct costs. The labour actually making the goods, the raw materials actually used. And the two together, incidentally, I'm less concerned about this terminology, but the total of the two, 343,200 plus 301,700. Oh dear, sorry. 343,200 plus 301,700. The total of the two so far, I get 644,900. Now, so I'm less concerned about the terminology, but the total of the direct costs is also called the prime cost. Well, those are the direct ones, but I did say we want all costs in the factory. We also need to bring in the indirect costs, or the overheads. So all the other costs in the factory. And what are they? Look at the balances again. Factory wages, indirect factory wages, 131,000. So the wages in the factory, but indirect, I said earlier, it's things like paying the supervisors in the factory who don't actually work producing, but they are a cost of running the factory. Any others? Oh, jumping one, there's general factory expenses. 64,800. Oh, jumping a few more, you see why I jumped in a minute. The last balance, depreciation of plant and machinery. It's an expense, and because it's plant and machinery, it's an expense in the factory. 21,600. Now, I jumped over a few. First of all, electricity. The reason I jumped over it is 31,200, but I remember note 2 said that we had to split electricity. 80% was a cost in the factory, 20% was electricity for the offices. Well, electricity for the offices is an admin expense for the statement of profit or loss. Here, I'm trying to work out the cost in the factory. So the cost in the factory is 80% of how much was it? 31,200. But there's another problem. Note 3 said there was a bill remaining unpaid. We need an accrual for electricity of 1920. So the total electricity bill is the two added together, 80% of which relates to the factory. So 31,200 plus 1920 times 80%, 26,496. Finally, maintenance expenses. Again, I've jumped over it because, again, note 2 says only 80% relates to the factory. How much was it? 42,100. And note 3 says we had paid in advance 1820. So prepayment, the actual expense will be 1820 lower. And so the cost for the factory, 42,100 minus 1820. 80% is 32,224. So I've now got all the indirect costs. Sales obviously aren't a cost at all. And so the total indirect costs, I add them up, £276,120. We're nearly there, but remember, I want to know the cost of all the goods I finished, all the goods that were actually produced. That 18,960 is what we'd already spent nearly finishing some goods, but they were finished this year. The 644,900 and the 276 were the extra costs this year of finishing those early ones and then doing a lot more work. But the total of those, let me add up before I say more, 18,960 plus 644,900 plus 276,120, 939,980, 939,980. That's what I've the total cost this year, but it's a total cost not only of finishing everything I've finished, but it also includes the cost of some items which weren't finished by the end of the year, the work in progress at the end. And so because I want the cost of those that were finished, we need to subtract the closing inventory of work in progress. You know, we've maybe only done half the work on these. They're not finished, but the cost of doing half the work is included at the moment in that total. And what is the closing inventory of work in progress? Look at note 1. It's 16,680. Which means, finally, for the manufacturing account, that the cost of the finished goods £923,300. So that's the cost of production of finished goods. So that's effectively workings. You know, it's not part of our official statements. But why do we need that? Because now I can do the trading account as normal. The trading account remember, it's the top bit of the statement of profit or loss. Trading account, exactly as we've been doing all the way through the earlier chapters. We take the sales from the list of balances 1356,000 less the cost of sales. And how are we going to get the cost of sales? As always, it's opening inventory plus the cost of what we made less the closing inventory. So it's the opening inventory of finished goods which was, back to the list of balances, 44,200 plus the cost of production of finished goods, which we just calculated in our manufacturing account, 923,300 less, as always, the closing inventory of the finished goods. Note 3 again, note 1 rather, 51,600 closing inventory, which gives us a cost of sales 915,900, which finally gives us a gross profit of 1356,000 minus 915,900, 440,100. Now that's all we were asked for, the trading account. The statement of profit and loss, you then subtract the expenses, selling and distribution expenses, admin expenses. But yeah, it was just the trading account we wanted. Good.